morning, Mr. Daniel.
Good morning, Mr. Hakimi and Tamizi. Please have a seat.
Okay, thank you, Mr. Daniel. So today, what we gonna have a meeting about?
So I've been reviewing our upcoming projects, and I believe it's time for us to seek additional funding for expansion. I'd like your insight on our financial position for our company. So please present your case.
I have prepared a summary of our current financial standings. Our cash flow is stable, and our profit margin has shown consistent growth over the past fiscal years.
That is promising. However, to fuel our ambitious project, I'm considering applying for a loan from the bank. What is our debt to equity ratio, and how will this loan impact it?
But Mr. Daniel, our current ratio is higher than the industry average. So this is poor, as this shows that the company is inefficient to finance its asset. Taking on a reasonable loan might impact the ratio.
Okay, now let's discuss about the interest rate that we can negotiate. What's the current market trend, and how can we secure the most favorable terms?
I have been monitoring interest rates, and they're relatively low at the moment. However, I recommend we leverage our strong credit history and financial health to negotiate the lowest possible rates. I will work closely with the bank to secure favorable term for the loan.
Okay, we want the best deal for our company. Moving on, could you provide an overview of how the loan will be utilized across our various projects? I want to ensure a strategic allocation of funds.
1, 2, 3.
Certainly, Mr. Daniel. I have prepared a detailed breakdown of how the loan will be distributed among the identified projects. This includes projected returns and potential risks associated with each investment. I will ensure the allocation aligns with our overall business strategy and goals. Okay?
Good work, Mr. Hakimi and Tamizi. Now let's discuss about the repayment plan. What are our options, and how can we structure it to minimize financial strain?
I have explored several repayment options. I recommend a flexible repayment plan that aligns with our project milestones. This approach will allow us to repayment efficiently without compromising our day-to-day operations.
You guys, excellent. Okay. Your thorough analysis and recommendation give me confidence in moving forward with the loan application. Let's schedule a meeting with the bank to discuss our proposal. I appreciate your diligence. Okay, both of you. Thank you very much. Mr. Hakimi, let's dive into our financial performance. I need a comprehensive analysis to guide our decision on financing upcoming projects.
Certainly, Mr. Daniel, I have conducted a thorough evaluation of our finances. Starting with liquidity, our current ratio is poor, so we don't have ability to meet short-term obligations. However, I recommend making new strategies to rebalance our ratio.
Good to know. What about efficiency measures? Are we managing our asset effectively?
Okay, Mr. Daniel. Our asset turnover ratio is lower. It's inefficient use of assets to generate revenue. However, we can optimize further by streamlining certain processes, so potentially enhancing our efficiency and profitability. Okay?
That's a very valuable insight. Speaking of profitability, what are the key metrics indicating our financial health in that aspect?
Our return on equity are robust, reflecting sound profitability. Return on equity is solid, indicating effective use of shareholders' investments. However, I recommend scrutinizing operating margins for potential cost-cutting opportunities.
3.
Understood, Mr. Hakimi. Now let's discuss the critical decision ahead, financing our projects. What is your recommendation? Obtaining loans or issuing financial securities?
Considering our positive financial indicators, I recommend obtaining loans. Our stable cash flows and several healthy ratio makes us an attractive candidate for favorable loan terms. It is a cost-effective approach that won't dilute ownership or shareholder value.
Interesting. What about the option of issuing payback period and net present value? Would that be a viable alternative?
While issuing the net present value, I've explored the XO. There is a risk and it will ultimately drain cash from the business. However, we still have the chance with the project's XX, where it's positive and benefits to our company.
Your analysis is thorough, Mr. Hakimi and Tamizi. I appreciate your insights. Let's proceed with the loan application process, shall we? Work with the team to finalize the proposal, and we'll schedule a meeting with the bank.
Certainly, Mr. Daniel, I will ensure the proposal aligns with our financial goals. Thank you for your trust.
Okay, good afternoon, ladies and gentlemen. Today, I will be present to you guys for comprehensive overview of our company financial performance, focusing on both previous and recent period.
Okay, so let's start with the income statement. Our revenue has shown steady growth over the past fiscal year, reflecting increased sales and market demand. Operating expenses have been carefully managed, contributing to a healthy operating income.
Turning to the balance sheet, our asset has increased, driven by strategic investment to the technology and facilities. However, our facilities are not stable. Our debt ratio is higher than the industry average, so it's inefficient financial asset.
Now, looking at the cash flow statement, operating cash flow has been positive, indicating our ability to generate cash from our core business activity. This positive trend allows us to reinvest in the business, fund project and service our financial obligation.
Our liquidity ratio are not good, ensuring of our company is not able to meet short-term obligations. Efficiency metrics such as asset turnover reflect less efficient management of our resources. So it's difficult to optimize the use of assets to generate income. Profitability showcase robust on equity. Return on equity remain impressive, indicating effective use of shareholder investment to generate profit.
In summary, our financial statement reflect a sound and resilient company. The positive trend in revenue, cash flow and profitability position us well for the future. Now, as we discuss financing option for upcoming project, I recommend considering the stability and strength of our financial position when making strategic decisions.
Thank you, Mr. Nishu and Mr. Maulana, for the presentation. How do our current financial compare to industry benchmarks?
We conduct benchmark analysis and our several performance exceed industry average in key metrics. So this possibility indicates our competitive strength and effective financial management.
Okay, so now let's discuss about the loan for the Project XX and Project XO.
Okay, Mr. Daniel, the time period for us to pay back the loan for the company XX is 1.5 years. Meanwhile, for the Project SO is 3 years. Meanwhile, for the Project SO is 3.5 years. Furthermore, net present value for the Project SX is Rm 54,860. Meanwhile, for the Project SO is negative 637. Choose the Project SS rather than Project SO because their net present value is better.
Good morning everyone. I appreciate the opportunity to discuss your loan application. I've thoroughly reviewed your financials and let's dive into the key factors that influence the decision. First and foremost, I examine your leverage ratio. The debt ratio is higher than the industry average. This is a pro as this shows that the company is inefficient to finance its assets. Currently, your ratio is lower than acceptable limits, reflecting an unbalanced capital structure.
Thank you, Mr. Ponash. We've been trying to maintain a prudent balance. How does our ratio compare to your benchmark?
Your ratio is lower with industry benchmarks, indicating responsible financial management. This negatively influences our assessment of your ability to handle debt. Next, I closely analyze your cash flow and interest coverage ratios. Positive cash flow provides confidence in your ability to meet financial obligations. Your interest coverage ratio demonstrated a comfortable margin, assuring us of your capacity to service debt payment.
Well, we are focused on optimizing cash flow efficiency to ensure stability and meet financial obligations.
Considering your return in equity ratio is higher than the industry average, this is good as this shows that the company is efficient to generate profit. Your profit allows us to provide favorable terms, reflecting the lower perceived risk associated with the loan.
Well, that's encouraging news. We appreciate your thorough assessment, Mr. Ponash. How flexible are your payment terms?
We understand the dynamic nature of business. I propose a flexible repayment plan tied to your project milestone. This way, you can align repayments with your cash flow cycle, ensuring minimal financial strain.
Well, I'm glad. Flexibility is essential for us. This sounds reasonable. Are there any covenant or condition tied to the loan?
We include standard covenants to protect both parties' interests, but we can discuss and tailor them to align with your specific business need. Our goal is to foster a mutual beneficial partnership.
Thank you, Mr. Ponash. We are pleased with the terms you presented. Let's move forward with the loan agreement. We believe this funding will significantly contribute to the success of our company.